Hi, my name is Carly Wardwell and I'm a certified credit counselor.
And my name is Carol Korth, and I'm also a certified credit counselor.
And welcome to Debt Counseling Corporation's Financial Fitness Fast Facts on credit scores. Now, credit scores and credit reports, they're common words and they're often used interchangeably. However, they are very different. A credit report is kind of like a report card of how you have handled your finances in the past. It will list out all of the accounts that you've had, whether you've made payments on time, how many accounts that you have, and much more, which you can learn about in our Financial Fitness Fast Facts, What is a Credit Report? Now, the credit score is a number. The most common credit score is the FICO score, and the number that you will be assigned to your credit report is between 300 and 850. The credit score is more or less a grade on how you've handled credit in the past. 300 is the lowest score that you can have. 850 is the highest score that you can have. Average credit score is about 650, depending on the statistic that you read. Anything 680 and higher, we're going to consider to be an excellent credit score. Now, when you pull a free copy of your credit report from annualcreditreport.com, you do not get a credit score with that. You do have to pay for the credit score. However, understand that it's not important to really know what your score is in that moment. It's important to know what information is on the credit report. If there are errors or if there's information that shouldn't be on there or is derogatory, you fixing those issues will help to increase your credit score. So, first and foremost, there are 5 main factors that make up the credit score that we want to go over with you today. The majority of your credit score, or 35% of the credit score that you have, is made up by your payment history.
The payment history is a very important part of the score. You do want to make sure you make your payments on time. If a payment is reported as 30 days late, it will be reported on your credit report itself, and it will bring down your credit score. Making payments on time is very critical. If you are behind in your payments, try to get them caught up as quickly as you possibly can to get yourself back to that current status.
And the information on your credit report is reported for 7 years. So on your credit report, I know if you've been 30, 60, 90 plus days past due over the past 7 years. So the last 2 years of your credit history is what's the most important. So that's all we can focus on. And you can focus on the here and now. So like Carol was saying, if you are behind, past due, the best thing that you can do for your credit score is to catch yourself back up, first and foremost. 30% of your credit score is also made up of the amount of money that you owe.
Now, what you should do is really take account of your credit cards that you have or any of the other debt that you may have. If your credit limit, which is the limit that the credit card company has given you that you're able to charge on, if your credit limit is, say, $1,000 and your balance currently is $600 or $700, you're more than 50% of your credit limit. Being more than 50% of your credit limit is bringing down your score. So you do want to bring those limits down. It is important to use your card so you can show the credit card companies that you are responsible with credit. But if you start using your credit too much and you go over that 50% limit, that will bring your score down. So it is important to start bringing those balances down to less than 50%.
So in that example with a $1,000 credit limit, we recommend you never carry a balance more than $500. The lower the limit or the lower the balance that you carry based on what your credit limit is, the better your score is going to be. It is a big myth out there that says only pay the minimum payments on your accounts because that will help to improve your credit score. That is a myth. The only thing that is reported is, do you make your payments on time and what your balance is. So the lower the balance, the better off you are financially, and your credit score is ultimately impacted, on-time payments and then the amounts that you owe. Keep those balances down. Better yet, carry no balance from month to month. That's how we want you to go. 15% of your credit report, of your credit score, is made up of the length of credit history. So they want to see that you've established yourself credit-wise. They do say that a credit history of less than 7 years is inadequate, But if you're just starting out credit-wise, you can only do what you can do. So have the account, use it responsibly, and allow for time to pass.
You need to build on your credit history as time goes by.
And I think what's the most frustrating for people who are trying to improve their credit score is basically the number one factor to help you improve is really going to be time. If you have past due accounts that are 3 or 4 years old or a month old, you need to wait for that to have more time elapse. So it's frustrating, but you won't typically see a big change to your credit score. Usually about 6 months is when you'll really start to see a noticeable change. The next section of the credit report is 10% of your credit history, 10% of your credit score rather, is made up based on your mix of credit.
So a mix of credit is basically revolving credit, which is credit cards, and then there are installment credit. Installment loans, such as car loans, student loans.
These are accounts where the payment stays the same from month to month.
Those are different mixes of credit that you have. Getting a mortgage, all those, will add into the mix of where your credit score is coming from.
So those are going to be the installment type accounts and then the revolving type accounts, typically credit cards, where the payments based on your balance can change from month to month. They want the credit scoring agencies, they want to see that you can handle the different types of credit that you have. I'm never going to recommend go and take out an installment loan just so you can diversify your credit. But if the occasion comes where you need to take out a student loan, you need to take out a car note, that typically does help to diversify your credit history, therefore can help your score ultimately. One side note I do want to make is a lot of times people say, oh, I'm going to get a car note, great, I'm going to get a student loan, a mortgage, it's going to help to improve my credit score. Remember, if you just take out a $10,000 car note, you now have more debt. So immediately, you're probably going to see your score drop a little bit because now you're adding to the debt load that you do have.
Right.
The last 10% of your credit score is comprised of new credit.
Recently, I actually had to do some repairs in my home, and I actually took out a new home improvement loan. And I did notice a couple of months down that my score actually increased. I had not taken out new credit in quite a long time. I have established credit cards, I had my mortgage payment, and I have my car loan. So this was actually a new limit that had been put into my credit report. And due to that, now there was new credit that I was establishing. And due to that new credit, it actually increased my score at some point.
And again, we're not recommending going out and applying for new credit just to diversify your score. It's really important that you pay attention to what you have currently reported in your credit report because that determines what your score is going to be.
And you certainly want to make sure that you can afford the debt that you have.
Absolutely. Typically we recommend that you carry no more than 3 to 4 credit cards. So we don't want you just applying for cards so you can have this new credit, because if you have 10 credit cards and they each have a $1,000 limit, you could potentially go out today and spend $10,000. And that can be an issue for individuals who are reviewing your credit score as well. So it's a very fine line about what you can do and what you shouldn't do and what's going to help your credit versus what's going to hurt it. And that's really what our certified credit counselors are here to help you with. If you want to learn more about credit reports, credit scores, steps you can take to improve your unique financial situation and credit, please feel free to give one of our certified credit counselors a call at 888-354-6332, and we'd be more than happy to help. Take care.
Bye-bye.